Well, okay guys, so welcome back to the series on mechanical trading. So if you're new to the channel, ensure you hit subscribe button. That's all I'm asking for you. I'm going to be giving out a lot of insights and experience over the market over the few years. So all I need from you is just subscribe to the channel so I can be able to drop more videos and it can reach more people. So yeah, so we are going to be talking about entries. So another thing that is important, or something that is quite important to mechanical trading and the system of mechanically trading, is an entry. So an entry is where you enter the markets, and what you need is a predefined place that you enter the market. There must be a condition that must be met for you to enter the market. So it's not something complicated or hard. It's quite easy. You just have to have something that you're comfortable with that you can use to enter the market. You can be using maybe the close of a candle. Once the candle breaks a moving average, you can be using maybe a 13, a 5 moving average, a 7, or maybe a 4, just a moving average. You can use a moving average. So this is an example, but you can test it out with several things to be using to enter into a market. So you can say that once price breaks a moving average, be it an exponential or a simple moving average, once it breaks then closes on the other side of the moving average, you enter at that instant. So that is the only thing you need for in an entry signal. Okay, so you don't complicate it. Don't use I don't know what. You just need one rule. You can be entering on breakouts. You don't, in mechanical trading, don't even check for the trend. Your work is just execution. So once price breaks, maybe for me personally, what I do, let me give you what I do. So I just wait for price to break not a high, a low or a high. Yeah, a low or a high on a time frame. So I just pick breakouts. I just read breakouts. That's what simply I'm saying. So once price breaks a low or a high in a what will I call it, in a pair like a GBP USD, once it breaks a high or a low, I enter. I don't go checking for, I don't know, the trend is going up, the trend is going down. I don't stress myself with that because I'm not in the prediction business. Okay, I'm in the risk business. So I don't care where the market is going. For all that I care for, it can go to hell. I don't give a care in this world about where the market is headed to. So I'll just wait for a certain time. For me, I usually enter the markets in London. So London, for me, where I'm at in Kenya, it's 10 a.m. in the morning or 11 in the morning, depending on the market shift. So when is it? I think it's in the end of the year till March, somewhere of that sort. I just wait for 10 in the morning or 9. I can even decide to be entering at 9, but for me, I just choose 10 in the morning during London. I just open my chart. I usually trade several pairs, so I just have the pairs on my screen. Then I wait for price to break out of a high or a low that had been formed when I was before London. Okay, so there are also some conditions I usually check for, but those are not in the entry. So for me, it's just checking out, did it break it the high or the low. So I usually set my pending orders. If there is no high broken in that, when I check the markets, maybe I can be late. Maybe I check at 10:15 instead of 10. Some things happen, I can wake up late or something. So I'll just go to the chart at maybe that 10, place my buy stop and sell stop. It's just that simple. I don't care about the trend. For me, that's something I need to tell you on that. So I just wait for that. Did it break? Did it not? There you can be using a moving average. Did it close above the 13? Okay, just open the chart, leave it there. You look where the 13 is and now monitor price. Once price closes, maybe you are using the 30-minute time frame or maybe the 1 hour. Once it closes above or below, if it closes above, you enter your buy. If it closes below, you enter your sell. That's all I do. So that is something that it's quite critical in mechanical trading. Ensure you have an entry strategy. Don't go checking for trends. Just check for a condition to be met. if price breaks that, the thing with mechanical trading is that you can code it out. So you can be able like to code it out and ensure that you can, if you don't feel like executing, like being there every day. In short, what I'm trying to say is that for mechanical trading, even a robot can replace you. Okay, so a robot can like be coded with the conditions that you have, because they are quite simple, to be able to replace you. So that is something that you need to be aware of, and to be like, to make your life easier. So for me, I don't check the trend. For all I care, even it can be ranging, I don't care. If the condition is met, enter. So you can use another one. Even the trend lines, you can use maybe a trend line. You draw a trend line at a certain time. So for me also, entry is determined by time, or when I enter the charts. But specifically, I just wait for session opens, like a London or a New York. I just decide I'll be trading only New York. For me, I just trade London. So I just wait for price like to break it. Once it breaks it, so you can be creative in that. So something that you'll find when you're creating a trading system, it's all about creativity. You must find something that works for you, something that you're comfortable with, and something that it's quite like you can even understand it and explain it. You can just see it form on the chart easily. So on your ears, or maybe you are not that experienced, once you stay in the chart markets for way too long, there are things that you'll see that continue forming time after time. Okay, so for me, I used to trade like order blocks back in the day. Like I wait for a break of order blocks, then I enter. But I quit that because it was quite hectic for me and it took a lot of time. But for me these days, all I do is just wait for breakouts. So I can wait for the breakout on a H1. For me, I usually use like a H1, but sometimes I can use an M30 depending on the pair. Some pairs are quite heavy compared to others. So for heavy chart pairs like gold, I use, or Nasdaq, I use an M30. So I just wait for price to break that high that has been formed, or that low that has been formed. So yeah, it's quite simple. Just find something you're comfortable with. It should be like a rule. Like if this happens, if price breaks, like for me, I usually set on a high, I set a buy stop. On a low, I set a sell stop. So if price breaks the high, I enter a buy. If price breaks a low, I enter a sell using the sell stops. So yeah, that's all for entries. If you have any question, leave it in the comment section below. I'll be glad to explain to you. I thought I needed a chart, but I think it's clear. Everybody knows what a breakout is. So for those who don't know, I've just explained it. It's when price breaks a previous high or a low. So that's a breakout. So I don't even think I need a chart. So that's something you need to know. In maybe once I finish with this like course, this free course on mechanical trading, I'll now start like using a chart, and I'll just be like showing you on a free range, like the way I'm doing these videos, and I'll be able to educate you on that. So yeah, that's that for that video. So if you're new to the channel, hit subscribe button, and the resources that are useful, you can just check the link in the description.